Assalamualaikum warahmatullahi wabarakatuh. My name is Wan Razli binti Wan Ahmad, and now I will start with the question 1, which is explain the reasons to the appropriate accounting method for Bucentric to record the investment in acquisite Berhad and a miskin Berhad. There's only one method of consolidation, which is the acquisition method. Under this method, the business combination is viewed from the perspective of the investor. The investor is the party that recognizes the cost of the business combination, the assets acquired and liabilities assumed on the investee. And acquisition is occur when the buying company acquire more than 50% of ownership in the company. Okay, for Bucentric Berhad, they're using an acquisition method to record the investment in acquisite Berhad and a miskin Berhad. Bucentric Berhad acquire 80% of acquisite Berhad and 60% acquire shares of a miskin. This makes both of the companies become a subsidiary to the Bucentric Berhad since the parent company acquire more than 50% of their shares.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurfatin Hazwani binti Jamaluddin, and I will explain for the question 1B, which is compute the goodwill or bargain purchase of acquisition of acquisite Berhad and Amaziskin Berhad. The first one is acquisite Berhad. Consideration transfer is 224 million, and the NCI is measured by fair value is 1 ringgit and 40 cent times 20% times 200 million equal to 56 million, and the total will give 280 million. For the fair value of net asset is ordinary share capital is 200 million, general reserve is 45 million, asset revaluation reserve ARR is 5 million, 17 million minus 12 million, and the return profit is 12 million, and the total for the fair value of net asset is 262 million. So it will give a goodwill of 18 million. So since the question have an impairment of goodwill 10%, so it will give 1.8 million. So the goodwill as at 31st December 2018 is 16.2 million. Next is goodwill of a miskin Berhad. Consideration transfer is 100 million. NCI is 1 ringgit and 25 cent times 40% times 400 million is equal to 200 million, and the total will give 300 million. Next is for the fair value of net asset is ordinary share capital is 400 million, general reserve is 10 million, asset revaluation reserve for brand is 2 million, return profit brought down is 69 million, and current profit 36,000 times 2/12 is equal to 6 million. The total for the fair value of net asset is 487 million. So we will give the question will give bargain purchase 187 million. Since the question have investment in debentures, so we will compute for the investment in debentures of 7 million, and we minus with nominal value of debentures held by Bucentric Berhad 20,000 times 25% is equal to 5 million, and it will give a goodwill of 2 million.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Arnya Titinisran, and I will explain about the NCI and group return profit as at 31st December 2018. The amount of RM56 million and RM200 million should be transferred to NCI accounts. The amount of general reserve for Bucentric Berhad is RM30 million and to be posted to group general reserve. There is no transfer to NCI since Bucentric is the parents. For general reserve of exquisite and miskin, the transfer amount to GGR and NCI is 0 because its balance CD is offset to pre-acquisition. For asset revaluation reserve for Bucentric is RM50 million and to be transferred to group asset revaluation reserve. There is no transfer amount to NCI because Bucentric is the parents. For exquisite, the amount to be posted to group assets revaluation reserve and NCI is 0 because the balance CD is offset to the pre-acquisition. While for miskin, the balance CD for assets revaluation reserve or RM32 million is to be minus with the pre-acquisition that is RM2 million, and that give a total of post-acquisition of RM30 million, and it to be transferred to group asset revaluation reserve and NCI. The amount to be transferred to GARR is RM80 million, that is 60% times 30 million, and for NCI is RM2 million, that is 40% times 30 million. For group return profit of Bucentric Berhad, the balance CD of RM194.8 million is to be added with the debenture interest received from exquisite for RM400,000 minus with URP inventory 4.64 million minus with ordinary dividend payable RM50 million, that is 1 billion times 5% minus with impairment loss from goodwill of exquisite, that is RM 1.8 million, and to be transferred to GRP and NCI for amount RM 1.44 million and 360,000 respectively according to the apportion percentage, and lastly to be added with bargain purchase that get from acquisition of a scheme that RM 187 million that give amount to be transferred to GRP of RM 326.120 million. For exquisite, the balance CD of RM 63.68 million is to be minus with pre-acquisition of RM 12 million minus with redeemable preferred share dividend for RM 12 million, that is 6% times 200 million, URP of plan of RM 2 million, that is get from sales price RM 7 million minus carry value of RM 5 million plus under depreciation of plans of RM 400,000, that is 2 million divided by 10 years times 2 years, and lastly to be minus with over depreciation of leasehold property of RM 600,000, that is 5 million divided by 25 years times 3 years. Thus, it gives the amount of post-acquisition of RM 37.48 million, and it has to be transferred to GRP and NCI for RM 29.984 million and RM 7.496 respectively. While for a scheme, the balance CD of RM 105 million is to be minus with pre-acquisition of RM 75 million and also amortization of brand of RM 400,000, that is from 2 million divided by 5 years, and thus it gives the amount of post-acquisition of RM 29.6 million, and it has to be transferred to GRP and NCI for amount RM 17.76 million and RM 11.84 million respectively. Thus, the total amount of Group General Reserve is RM 30 million. For Group Asset Revolution Reserve is RM 68 million. For Group Return Profit is RM 373.864. And lastly, the amount for non-controlling interest is RM 286.976, and it has to be transferred in the consolidated statement of financial position.
Assalamualaikum, my name is Shazwani binti Muhammad Sari. Now I will be explaining about question D. This question requires us to prepare consolidated statement of profit or loss and other comprehensive income for Biocentric Berhad for the year ended 31 December 2018. Revenue, cost of sales, dividends from other investment, operating expense and taxation for a scheme need to be apportioned to 10 months since we acquired this company on 1 March 2018. For the revenue, RM 1.995 million, we arrived to this amount after we plus revenue from all the company, and then we need to minus 35 million, which is the amount of goods that Biocentric sold to exquisite. For the cost of sale, RM 1.305710 billion, we plus all the cost of sales. Then we need to minus intra-company transaction RM 35 million of goods sold by Biocentric to exquisite, the unrealized profit of the inventory RM 4 million since the good remains unsold, opening inventory RM 350 million of exquisite, and 640 million of unrealized profit of inventory sold by Biocentric to exquisite to Amaze. Rental income RM 23.6 million. For operating expenses, we need to minus 400,000 of the amortizations of brand, 200,000 of under depreciation of leasehold properties since it is revalued, and plus 200,000 over depreciations of plant, and we will get 511.8 million. Impairment loss RM 1.8 million. Interim ordinary dividend and debenture income for exquisite is zero because they are intra-company transaction. Dividend from other investment RM 31.9 million. Debenture interest is RM 1.2 million after we minus the intra-company transaction RM 400,000. Redeemable preference share RM 12 million. Then we will arrive at profit after tax of RM 217.990 million after we deduct RM 73.5 million of taxation. On 17 July 2018, the value of property of Amaze scheme increased by 30 million. That means we have a surplus of revaluation of RM 30 million. Then we will get the total comprehensive income of RM174.990 million. For the profit after tax attributable to, we need to calculate the non-controlling interest. First, let's calculate the non-controlling interest from Exquisite Berhad. After we get the profit after tax of Exquisite of RM15.580 million, we need to minus the 200,000 of under depreciations of property and plus 200,000 of over depreciation for plant and minus 12 million of redeemable preference share dividend. Then we will get 3.58 million. We need to multiply this with 20% of NCI and we will get 716,000. Since Exquisite has impairment loss, then the impairment loss has to be multiplied with NCI of 20% and we will get 360,000. For Amazkin, we need to minus amortization from the profit after tax of Amazkin. Then we have to multiply with 40% of the NCI and we will get 11.840 million. After we total up, we will get 12.196 million. So, the NCI now is RM12.196 million. For the parents, from the profit after tax amount, we need to deduct RM12.196 million, only then we will get the amount of parents. For the total comprehensive income, to calculate the non-controlling interest, since we have a surplus on revaluation, we just have to multiply the NCI 14% with 30 millions of the surplus and add it back with the previous NCI amounting RM12.196 million. So now, the NCI for total comprehensive income is 21.196 million. To calculate the parents, we need to minus the total comprehensive income of RM174.49 million with RM21.196 million of the NCI.
Hi, we meet again. So I will explain to you and show you our consolidated statement of changes in equity of Bureau-centric Berhad for the year ended 31st December 2018. For balance brought down for OSC is 1 billion. For written profit is 317,570 million. For general reserve is 30 million. For ARR is 50 million and for NCI is 63,980 million. For acquisition during the year, we'll put under NCI of 200 million and for profit after tax, we'll put under written profit of 132,294 million and 12196 million under NCI. For next one is surplus on revaluation, we'll put 18 million under ARR and 12 million under NCI. Next is ordinary share dividend, will be deduct 76 million under written profit and 1.2 million under NCI. So we will get balance CD for ordinary share capital is 1 billion, for written profit is 373,864 million, 30 million for general reserve, 68 million for ARR and NCI will be give balance CD of 286,976.
Okay, now I will continue with the last part, which is consolidated statement of financial position as at 31st December 2018 for Bureau-centric Berhad. We will do with non-current asset first. For property, 290.4 million plus 258.6 million plus 210 million plus ARR 30 million plus 5 million and minus depreciation 600,000, that will get 793.4 million. For plant and machinery, 204 million plus 84 million plus 170 million minus URP 2 million plus depreciation 400,000 will get 456.4 million. For under investment, 215 million plus 60 million plus 44 million, that will get 490 million. And for the goodwill, 16.2 million will plus with 2 million, that will get 18.2 million. And for brand, 2 million will minus the amortization 400,000, that will get 1.6 million. Okay, now I will continue with the current asset. For the inventories, 92 million plus 42 million plus 71 million minus unrealized profit 4 million plus good in transit 3.2 million minus unrealized profit 640,000, that will get 203.56 million. For bill receivable, 26 million plus 38 million minus 3 million, which is intercompany transaction, that will get 61 million. For the trade receivable, 57 million plus 47.68 million plus 40 million minus 7 million, which is intercompany transaction, we'll get 137.68 million. For bank, 38 million plus 40.28 million plus 40 million and plus cash in transit 3 million, that will be 121.28 million. For the total asset, it will be 2.212.120 billion. Okay, I will continue with the equity. For ordinary share capital will be 1 billion. For general reserve will be 30 million. For asset revaluation reserve will be 68 million. For group return profit will be 373.864 million. For non-controlling interest will be 286.976 million, which is that we'll get from the statement of changes in equity. Okay, I will continue with the non-current liabilities. For 6% redeemable preference shares will be 200 million. For the 8% debentures will be 20 million minus 5 million, which is 5 million belong to the holding, and we'll get the 15 million balance. For the current liabilities, trade payables 60.6 million plus 27 million plus 60 million and minus 3.8 million, which is intercompany transaction, that will be have 143.8 million. For the bill payables, 27 million plus 7.28 million and minus 3 million, which is belong to the intercompany transaction, that will get 31.280 million. For the debenture interest payable, 1.6 million minus 400,000, which is belong to the intercompany transaction, will get 1.2 million. For the ordinary dividend capital that paid by the Bucentric Berhad will be 15 million, and redeemable preference shares payable that paid by the acquisition Berhad will be 12 million. So the total liabilities and equities is 2.212.120 billion.
Next, we'll move to question 2A. Explain briefly the meaning of joint control as specified under MFRS 11 joint arrangements. So according to MFRS 11 joint arrangements, joint control exists where the parties contractually agree to share control and decision about the relevant activities of the joint arrangement, have the unanimous consent of all the parties sharing control. The parties have to assess the extent to which the parties should act together to direct their activities that significantly affect the returns of the joint arrangement.
Now, I will proceed with part B, 1 Roman. This question requires us to determine the type of joint arrangement and to explain appropriate accounting treatment in accordance with MFRS 11 of joint arrangement. Before we answer the question, it is important to know the terms of contractual agreements in order for us to decide whether it is joint operation or joint venture. But for this question, since it is mentioned that the main feature of this arrangement is the parties have the right to the assets and obligation for the liabilities, it means this is joint operation. Under joint operation, Delta Berhad and Global Berhad are now operators. Under joint operation, they will recognize in their own financial statement their interest in the asset, liabilities, revenue, expenses in the joint arrangement.
For question B2, assuming that Yaser Berhad has the rights to the assets and obligations for its liabilities, would there be any difference to its accounting treatment? Yes, there is a difference to its accounting treatment. If Yaser Berhad has the rights to its assets and also obligation for its liabilities, then it will become a joint venture. Based on MFRS 11, the terms of the contractual arrangement of joint venture can be defined as when the parties to the arrangement has rights to the net assets. It is the separate vehicle entity that has the rights to the assets and obligation for the liabilities relating to the arrangement. Thus, the joint venture between the Delta Berhad and Global Berhad shall recognize its interest in Yaser Berhad as investment in joint venture and account for the investment using equity method in accordance with MFRS 128 investments in associates and joint ventures.
Last but not least is a question 4. With a reference to the MFRS 10 consolidated financial statements, explain the above arguments. There are some situations where investor has a control towards investee even if the holding interest is less than 50%. Investor has a control towards an investee when it is exposed or has right to variable returns from its involvement with the investee and has the ability to affect those returns through its power over the investee. Thus, in accordance with MFRS 10, the principle of control sets out the following 3 elements of control. First, power over the investee. Second, exposure or rights to variable returns from involvement with the investee. And last but not least, the ability to use the power over the investee to affect the amount of the investor's returns. Fatin, I got a question for you. Can you give me another example of joint control?
Thank you, Azrin, for the question. And another example for joint control is A have 40%, B have 30%, and C have 30% are parties to an arrangement. The contractual arrangement between the three is that at least 80% voting rights are required to make decisions about the relevant activities of the arrangement. In this case, all the three have joint control as all three have to agree on the decision.
Okay. Wani, what are the accounting treatments for associate?
Thank you, Arnie, for the question. Accounting treatment for associate use equity method, which is a method of accounting. Hereby, the investment is initially recognized at cost and adjusted thereafter for post-acquisition change in the investor's share of the investee's profit or loss, and the investor's other comprehensive income include its share of the investee's other comprehensive income.
Me, I have a question. What are the assumptions of preparing consolidated financial statement?
Okay, thank you, Wani, for the question. FAR610 exempts a parent from preparing consolidated financial statements when, firstly, the parent itself is a wholly owned subsidiary or is a partially owned subsidiary, and the other owners were informed and do not object to the parent not presenting consolidated financial statements. Secondly, the parent's debt or equity instruments are not traded in public market, that is not a listed equity. Thirdly, the parent is not in the process of issuing in a public market its debt or equity instruments by filing its financial statements with the regulatory authorities like the Securities Commission, and lastly, the ultimate or any other intermediate parent produces consolidated financial statements. All 4 points must be exist for parents to be exempted from preparing consolidated financial statement.
Azrin, I have a question. What is the difference between bargain purchase and goodwill?
Thank you, Fatin, for the question. Okay, for the answer, goodwill of consolidated arises when the fair value of the net assets of the investee is less than the fair value of the investee's equity share as held by all equity holders, while for the bargain purchase arises when the price paid for the fair value of the equity shares of the investee is less than the fair value of the net assets of the investee on the acquisition date.